Okay, guys, sorry. You should be able to hear me now. We'll get started in about 1 minute. It's going to let people join in. We'll get started exactly 4:50. It's probably just about 30 seconds here. Okay, guys, sorry. You should be able to hear me now. We'll get started in about 1 minute. It's going to let people join in. Oh, that's going to be an annoying echo. Hold on. We'll get started if that echoes, I apologize. Cool. All right, guys. So let's get started. Anybody that hops in here late can just watch the replay to get caught up. So, guys, welcome to just a very simple breakout strategy. Now, depending on how new you are to Forex or not, you may know some of these concepts. But my goal with this is to get people taking maximal profits off of strategies like this and kind of just giving you guys confidence to enter these trades and to kind of just follow them without freaking out on pullbacks and just things like that. This strategy can be used on any time frame. I'm just going to say that right now. So whether you're a swing trader, whether you're a scalper, no matter what you like to do, you should be able to utilize this strategy. So just some things that we're going to need for you guys to know. If there's anything here that you don't know, feel free to study up. The Bollinger Bands can actually be substituted for other indicators. That's just my preference. It's about the only indicator that I use, unless you consider Fibonacci extensions some sort of indicator. I don't really consider it one though. So you'll need market structure basics, Fibonacci extensions, and Bollinger Bands, like I just said. Risk management, and really most importantly is patience. Some of these trades can take hours to days to pan out, depending pretty much on the time frame. I mean, even with 4 hours with news, sometimes you'll see that they actually do execute pretty quick. But in low volume markets, which is pretty much what you're going to be looking to trade in, a lot of patience is going to be required. So let's jump right into this. If you guys have any questions, feel free to throw them in the chat. I will address them later, but for now, I'm going to stick directly to the presentation, okay? So we're going to talk about identifying the potential opportunity. So pretty much what we're going to want to do, guys, is we're going to find a trading range, okay? And it could be accumulation, it could be distribution, doesn't really matter. If you don't know what those are essentially just two different types of ranges, where accumulation is the collection of buy orders and price moves higher, and distribution is the distribution of sell orders and price moves lower from that. So you want to find a trading range, preferably with at least 3 inner range swings. So what I mean by that is pretty much what I have drawn out. So I have the red, which is an up and down swing, a yellow, which is the second up and down swing, and then the blue, which is actually pretty much one swing. It's just a swing up where it actually broke out of the range. Now that's okay, and that's actually why I picked this as an example. That third push up or down, if it breaks out, is quite okay. We can work with that, okay? But this is the minimal, so 2.5 to 3 inner range swings. Why can't I move down? Okay. So what to do with your potential opportunity, guys? You're definitely going to want to wait and be patient, okay? Now, I say this is a simple breakout strategy, but it doesn't mean we're going to be trading the actual breakout, okay? That's pretty much betting on one side or the other to break. That's not what we're technically in the business of doing. You'll see me try to do that a lot with pretty much longer ranges. So if a range has about 5, 6, 7 inner swings in it, then I'll try to catch the bottom of a range. But for this, we're actually going to wait for retests. So be patient. We're going to wait for price to break out. And one way you can confirm that is actually with Bollinger Bands. So what you're going to watch for are Bollinger Bands that have volatility spikes. A common play that I'm showing in the image here, you can see at the top here, my mouse, price riding the upper band, right? So riding the upper band into the top of the range. You see the bottom band expanding. Actually, 1 second, guys. Need to just send a link somewhere else. Okay. You see the bottom band expanding, right? So as this is riding up, bottom band expanding. starts to pull back, but the band starts to turn up and price follows it. So this is a pretty typical play. It's not always going to look like this, and whether you use Bollinger Bands or not are really going to matter here. But if you have any other indicator that's going to show you a potential breakout, you can throw that on there as well. You could look at volume, anything to kind of just signify that price is actually breaking out of the range and it's not just a false move. Okay, that's what this is for. This is just to confirm to me that price is moving out of the range with actual conviction. So once we get the breakout, so at this point, price is broken out of the range, which you can see in the image down here, and we're going to get ready to enter a possible trade. So there's a few things we have to check first, but don't worry, you're never going to run out of time. You're never going to miss the trade because you're checking these things. More than likely, you're going to miss the trade because you're either impatient or just very simply something we're actually going to talk about further into this, which is just waiting for a deeper retracement and not actually getting it. So I want you guys to notice after it breaks out of the range, I want you to check the overall trend on a time frame that's 1 or 2 steps higher. So for example, if this was a 15-minute chart, which it's not, it's an hourly chart, you would double check the 1 hour and the 4 hour. Now, I know that a 30-minute is technically 1 step higher than a 15-minute time frame, but in my opinion, it's not so different from a 15-minute. So jump to the 1 hour, jump to the 4 hour. Since this is a 1 hour chart, you would go to the 4 hour and the daily and just find out which way the trend is going, right? If you're trading with the trend, then obviously you can trade with more confidence. If you're trading against it or you're looking at a possible reversal, not that you shouldn't take the trade, but you should probably reduce the risk, okay? So, I mean, if you're normally trading like 0.10s, if it's a counter trend trade, you might want to cut that in half, depending on your trading plan. So first thing you look for when it breaks out of a range is a support and resistance area, right? So nearby. So we're going to look left and we see the support or the resistance here. And we just draw a line, and 9 out of 10 times there will be something there. And we're just going to wait for it to test that level. Now, we're going to watch this level for potential bounce back towards the range. And we want to be patient for this. We don't want to rush it. If price flies past it, like say there was a news event or, it just goes 15, 20 pips above this resistance, then this strategy is essentially invalid. Now, I don't say that with a lot of confidence because it could always come back to this range and execute a good trade from exactly what we're expecting. But chances are you're not going to want to wait for that. Like if you guys check out USD JPY today, there was a range that it's been trading in the past 2 days. Waiting for it to come back and retest that is probably going to take some time. So I would avoid that. I wouldn't even worry about it. I would look for my next setup. From there, we're going to look for our retest and entries. And this is where it starts getting fun. So if we get a rejection at that next level of support or resistance, which you can see here we did, right? So it came up, rejected off that level. We can expect a retest to the range very shortly after, right? So simple. Pretty much breaking out of a range, retesting it, pretty basic stuff. Everybody should understand this. Now, this is also where your best judgment comes in because there's going to be a few different opportunities that you can capitalize on this. So patience can bring the best risk to reward, but can also bring missed opportunities. So this goes back to what I was saying before, right? So patience can either be your best friend with this, or it can make you regret not actually entering. So as we begin testing the top of the range, it will usually find support, which gives us a good retest entry, which is what we want, right? So we want it to gather orders, we want it to break out, and then we want it to kind of test around that area to see if there's anything left before it continues its trend. Now, as you can see here, the top of the range, as we drew here, extended the line, price broke up, went to the line, came down, found that support. Now, however, the market is not perfect, just like we're not perfect. Your entry is not going to be perfect. The market's not going to be perfect. Don't ever expect it to be perfect. So there will be instances where it respects the top of the range and everything is all good, and there will be times when it tests further into the range. So we can see that even though this is probably a good entry, you could probably buy it here and, still make your good profit off that. But it rallied a little bit and then just fell back into the range. This is not something you should freak out about. This is not something you need to worry about. It's just a drawdown. They're normal. This is an opportunity, in my opinion, to actually scale in, which is what this section here is going to be about. So how do you approach this, right? My recommendation, split your lot size. My best advice for this, any position you want to take, even if you're not stalking a perfect setup, would be to scale in. So at the first test of the range, which is, guys, here, so right at the top of the range, your first test of the range, I would recommend that you put in a smaller lot, a test lot, something about 20 to 25% smaller than you normally use. Now, some of you might not be able to do this because of your account size, right? So if you're using 0.05s, maybe even 0.03s, you can split that up between multiple positions if that's your normal lot size. So you can drop a 0.01 at the top of the range here and just kind of test the waters. If it takes off and it never comes back, at least you're in with a smaller position, right? At least you're in the market. If not, if what happens with here, where it kind of just bounces and then falls back into the range, now you have the opportunity to scale in with the same lot size, another 0.01 or whatever 20 to 25% of your lot size might be, to get a better entry without holding all that extra risk and all that extra drawdown. So in my experience, and the examples I use in this actually kind of prove this wrong, is that most retests like to test back inside the range, okay? There's nothing more that I love than getting something back inside the range. If it breaks out and comes back in, for me, that's the best risk to reward ratio, and that's what I want. That's what this is all about. This is all about grabbing, 1 to 2.5, 1 to 3, sometimes even 1 to 4 or 5 or higher risk to reward ratios. So if you're scaling in, I would recommend you looking at old levels of minor support or resistance inside of the trading range for ideas. Now, this screenshot really doesn't show it too much, but if you see where this came down here, it's testing a level where consolidated, or I guess you can say here that it kind of held as support. So you can use these as kind of indications of levels to get in at, or you can turn back to your other tools. You could use fib retracements, moving averages. You could somehow use the Bollinger Band if you're getting a retest of the middle line. Whatever you want to use to continue scaling into the rest of your position, right? So alternatively, you can also scale in after you believe it has found the low. So if this happened and then it pushed back up with this candle and you wanted to get in, that's not bad either. But personally, I like to get in as it's falling because that's going to get me the best price. So let's recap what we have so far. So we have our trading range, right? So we established our range. We established that price has broken out of this range and is retested an old resistance level. So once we get that retest, or that deeper retest, entries would be anywhere in this blue box if you were trading this specifically. Now, we're not perfect, like I said before, so we're not going to assume that you got a perfect entry, right? We're not going to assume you got in at the bottom here. Some people would like to do that. I don't do that. Let's assume you kind of just got in somewhere in the middle of that box. Now, I marked this up. You may not have this when you're entering, but as time moves on, you may. This is just a good indication that you're in a good spot, right? So a sign of market structure staying intact by forming a new higher low, or a new low or a high if you're on the short side, which kind of just gives you confidence that if you have any entries down here, that they're pretty much protected by this market structure until something else changes. So what you want to do now is, or actually this is not even what you want to do now. I'm sorry, I added this afterwards, but you want to identify the risk before you even get in. And this is very easy, okay? So you can all probably figure this out. Your stop loss is going to be below the range, obviously. Now, I don't recommend putting it right below the low. I actually move mine about 9 to 12 pips away. just in case some random order collection or stop hunt below the range comes down, it won't kick me out. There is always a chance that this happens, even if you put it 9, 12 pips away, 15 pips away, a big enough market spike could be there to take you out. Now, that's mostly revolved around news, right? There's not always going to be this weird kick in volume where you're going to get a spike down or up to stop punch you out. So mostly, like we said, it's mostly going to be around news. So this means if your original identified pip range is 30 pips, right? So let's say from the bottom of this to the top of this is 30 pips. You're going to be adding, let's say, 10 pips to that. So you have a 40 pip stop. So if you get in at the top of the range, you're running about a 40 pip stop. Now, that may sound like a lot, but trust me, the reward on something like that is going to be much nicer. At least 80 pips. At the very least, 80 pips. This number will obviously vary per setup, so each range is going to have its established amount of pips that it's trading within. And time frame, right? So if you're trading a 4-hour time frame, I wouldn't expect it to be like a 20 pip range, especially since we're looking for 3 inner swings. For it to swing on a 4-hour, you're looking at least 100 pip stop. So at this point, when you have that range, you can start planning what your lot size is going to look like. Now, if risk management, isn't your thing, you don't have a trading plan, go get one. Because honestly, guys, like, this strategy is not going to work for you. No strategy is going to work for you if you don't have a plan for how you do your risk management. So if you're the type of person that likes to gamble on stuff, you might win money trading the strategy. But I'm telling you, it's going to eventually catch up with you and knock you out of the market, because this isn't some foolproof strategy where you're never going to lose. This is just getting you really, really, really good risk to reward ratios and getting you out at a good time, right? So that's like 90% of it too. Like, you can get a great entry, but if you don't get out at the right time, like, you're missing so much profits if it bounces off something and you're, losing 20 pips because of that. In the long-term things, that kind of sucks. So by now, just to recap, we have our entry. So all we have to do now is manage our trade, which is pretty simple for some people, but other people get very emotional when they see pullbacks, or they're worried they're going to get stopped out at break even. So let's discuss this a little bit. So stop losses are usually pretty simple. Most of you guys know how to use them. We just went over them. They're pretty easy. But what about take profits, right? So how do you know when to hop out of a trade for maximal profits? Well, for this, we're going to use multiple take profits for one, because we are scaled into our position, or you should be anyway, which means you have multiple positions open, all equaling, of course, one set risk parameter. You're not adding risk every time or adding additional risk, I should say, every time you're entering a trade. And now, usually, Fibonacci extensions are paired with Fibonacci retracements. To be honest, I don't think it's necessary. For a Fibonacci retracement, all you need is an A, B, and C point. Doesn't really matter if that falls on a Fibonacci retracement or not. No. If I went back and checked this out for you guys, this is in the middle of nowhere. This is like not even on a fib level. This is on a 38.2, which is beautiful. This is like in between two zones. So it's not even like you're grabbing a fib entry here. What slide were we on? Okay. And then also, how do you know that the trade will still trend towards the take profit and it's not going to reverse on you? So personally, like I said, I use the Bollinger Bands. What I look for is price to remain steady above the middle line with the bands pointing upwards or downwards. If you're selling, it's going to be downwards. But for the example here, we're in a bullish market. So, or you can use your other technical tools if you have a specific way to make sure price won't reverse on you. So if you have moving averages, whatever it is you guys use, ADX, TDI, RSI, whatever you guys want to use. I prefer none of those. I just prefer the Bollinger Bands. So managing the trade using Bollinger Bands and market structure. So this is the same chart, right? So in the bottom left here, we have our range, right? So we broke out of it. These are our retests, and this is now all potential profits. So As price travels back up above the range, it shows the same signs as when it did when it originally went to breakout. If price is above or testing the middle line, you are okay to hold. Okay? All right, so as long as we're above this middle line and we're not breaking that structure, you're okay to hold. And you're going to get spikes to that middle line. So look, you get spikes up, you get a low volume pullback to the line. You come up, a little too quick, price throws it right back to the line. And then you kind of keep going. Now, over here, you'll notice that price pushes up and price rejects and goes actually through that middle line. Now, at this point, you want to look at some questions here. So, did price fall under the middle line? Okay, relax. Don't panic. Close it. Don't freak out just yet. Check to see if market structure is still intact. Did it break a recent high or low? Which it did. So it wiped this out. So yes. Did it form a lower high? Which it hasn't. So we can relax. If it did form a lower high, you would adjust your risk. It does say but hold. If you really, really feel like it's going to reverse, I would recommend jumping out. But I usually just adjust my risk. And if it hits the stops, it hits the stops. That's all going to be dependent on you. So knowing when it's time to dump it. So like we just went over, if price dips below the middle line and market structure breaks, we will want to hop out. And that's shown below. So same chart, if you look here, that spike up, 4 candles down. Spike up, 4 candles down. So we broke the middle line, come back to the middle line, come up. We form a lower high or a change in market structure, right? So broke structure here, changing structure here. Probably a good time to hop out of your trade. If, you weren't at a take profit level, which we haven't discussed yet, so don't worry about that. The take profit levels, very easy, guys. If you guys use fibs, you guys know how this works. But there are some things you should know about these levels, okay? So using the Fibonacci extension tool, you're going to use the lowest point of the range to the highest point of the breakout, back down to the retest level. So that's this. The lowest point of the range to the highest part of the breakout, back down to the lowest retest level, which is here. You will be using the extensions, the 100 level, the 123.6, and the 161.8. Pretty standard levels. You should have them all on your standard Fibonacci extension tool. If you don't, just edit the properties, throw those in there. Now, at the 100 level, if you were scaled in with like 3 positions, 4 positions, anything more than that, I'd say you're adding too much. You can book one here if you really want to. More commonly, I put my stops at break even at this level. So adjust your risk to break even or adjust the risk to a more comfortable level. So if it hasn't moved all that much or it bounced off the 100 level and you think it's going to revisit your entry, you don't have to put it to break even in fear of getting stopped out at break even. What you can actually do is just reduce the risk to a more comfortable level. So if you're running a 40 pip stop, you can tick that up like 30 to 30 pip stop or a 20 pip stop just to kind of take some risk out of the market now that price has moved up. At the 123.6 is where we will book partial profits. This is also the main take profit level. So reduce a good majority of your risk. This usually yields around a 1.2 risk to reward ratio. The 161.8 is where we get our most risk to reward. The reason you want to book a lot of your, not a lot, but partial profits at the 123.6 is because it's very common for it to bounce off this, or it's very common for it to go past it but not actually hit the next level. Okay, so at the 161.8, if you hit there, you're going to take all final profits. This level is sometimes a pipe dream or a just miss level, like I said. Price will usually react pretty heavy off this level if it's a good time of day. Obviously, if it's, right now in the Asian session, it's not going to be doing anything. There is a good difference between the 123.6 and the 161.8. I recommend you move stops just below the 123.6, just in case if market structure changes. you can get in on those locked in profits while still kind of holding for the overall take profit. So again, guys, your take profit levels, the 100 fib extension, the 123.6 fib extension, the 161.8 fib extension, and booking a lot of your partial profits at the 123.6. And you guys are going to see just why in a little bit. Actually, you know what? Let's do that now. So this is our full example, right? So we have everything here. We're going to go through it just one more time so people understand. We have our trading range, right? We have our breakout, and we have our retest. So we put our fib extensions there. We're already in the position. Put our fib extensions there, managing our trade above the white line in the Bollinger Band until that changes. And as you can see, we come up, we hit the 100 level, stops at break even down here, up to the 123.6, second take profit. It's actually hit twice. So if you weren't triggered here, or if you didn't get a chance to book here, you have all this time to kind of book profits. Now, this is why we book partial, because this happens a lot, where it's going to push above the 123.6, but it's not going to make it to the 161.8. Okay? So at this point, I mean, you have your profits locked in, or you have your profits somewhere protected, like right under here. And you're either going to, one, get stopped out in profit if you don't get out, or two, you're going to book on this spike up, or maybe when it comes back down and you realize it's just not going to make that push like you thought it was. Now, like I said, guys, it's very basic, right? You know, that's why it's called a simple breakout strategy. It's nothing crazy. It's just a few tools that I wanted you guys to know in order to manage your trades and to kind of just really have confidence to enter them and confidence to take profits. Because something that I struggled with as a trader when I first began was getting really good entries and really bad exits, right? So making 80 pips, but getting out at like 45. That's no fun. I mean, yeah, you're profiting, and, you know, profit is profit. You're moving forward as a trader. Your account is growing. Congratulations. That's great. But you want to get out at the best possible time, right, guys? Like, you don't want to, there's nothing more that sucks than seeing like $100 in profit only to get out with like 68. Like, just no fun. So a few other examples of this, and this is actually gold today. So this is actually hit targets today. And if you notice, this range up here is actually the same range in which we're taking profits here, right? Because what is this, guys? This is just another range, right? When you see it come up like this, you're just trading inside of another range. Now, the reason why I want to show this one is because we actually did this analysis, and I actually gave this analysis out to a few people that are on our team, and it hit targets today. Pretty much like we said, it would at 12:00, 12:07, I think that is. And you can see that it's been sitting on that relatively well. So we have our range here, and yes, I know it's a pretty ugly range, but you have your 1, your 2, and then your kind of third one here. So their peaks, they don't have to be crazy swings. This is also a really kind of bunched up chart, so it looks smaller than it is. I'm trying to fit all this price action into it. So we get our range, we get our breakout, we get our retest, which shows you it's pretty much right up against that range, right? It kind of wicked it, honestly, and came back down and formed another little zone. But nonetheless, you get that retest. You can look to enter in. We're not going to be perfect. We're not going to get the top of that. We all know that. So we'll assume that you're in on these candles here somewhere. You draw your fib extensions from the top of the range, your breakout bottom, your retest. You get your take profit levels, and you ride your Bollinger Band, right? So you're riding the downward band. This starts to expand up here to show that it's ready to move down, and then the bands turn to follow the trend. Now, when you get to the 100 level, we actually get a push up past the middle line. Now, I know I told you guys to not freak out, to not panic close when you see that, and to do what? To check market structure, because this band isn't necessarily always going to stay under the middle line. It's at some point going to have to test the top. And all that's doing is retesting pretty much the breakout bottom from over here. That's all it's doing. It's just testing market structure, which is okay. You could actually, if you wanted to, and if you're an experienced trader and you want to, you can add another position here and continue down. It's always an option. So this is your only potential scare that it might come back to your entry, but you respected it very well. From there, you see that it breaks back down below the middle line and continues its journey down to the 123, where you would book a majority of your profits. And since you're holding at least one position or maybe a few more, you're going to get those final profits after a test of the middle line again today at the 161.8. So you can see this plays out quite often. Pretty much all you're doing is establishing a range and then fib extensioning the retest of it. That would be the easy way to explain this, but I want people that are beginners to understand how to manage the trade, understand that they should be getting out a take profit at the 100, that you should be booking profits here, because if this came up and then you had a sentiment change, you want to at least get out with some profits. Now let's take an example, take a look at oil. Now this is oil also today. This is a 4-hour or a daily chart. From the looks of it, it might be a 4-hour. So we have this range. It's a huge range on a 4-hour, right? So like I said, you're going to have a lot of risk on a 4-hour range like this. We have multiple peaks inside the range, 1 peak, 2 peak, a little mini peak here, and like a 4th, which on the downturn actually breaks out. So we break out of the range again, we retest. This goes a little deeper into the range, but nonetheless doesn't really go all that far. And I actually believe that was also like an end of day spike or something. So we fib extension that, and as you can see off that retest, we're now heading towards profits. Now this is a trade I'm actually in. If you guys seen my Facebook, I am in from up here. I mean, I'm also in from like all these little peaks up here. I've been selling oil a lot recently. And we're now at the 100. I think we have actually even retraced to the 100% level. I have not booked any profits yet because I'm very, very, very long term on this oil sell. So I'm actually targeting much lower than the 161.8. But if you were playing this, you would look to scale out of a position here as it broke through. Maybe even if you waited and got out down here, that's even better. But we're still looking for overall profits down at the 161.8, even at the 123. We're still not even scaled out of this yet, because until it breaks through and maybe finds some sort of support down here, then we'll look to exit everything. So really simple strategy. I'm going to check the chat if you guys have any questions. If not, I am going to do 1 or 2 markups that are not part of the examples that we have here, just to show you guys kind of the thought process behind actually marking it up instead of just having set still examples. So let's see if there's any questions here. Can you send me the slides? How many people would want me to upload the slides? If people want that, then I could possibly do that for you guys. Cool, so no actual questions. So let's actually go to a chart. Let me swap this over here. Just give me 1 second, guys. Like I said, guys, this is very, very basic market structure, very basic principles. Oil, actually, now that I'm checking, has actually smacked right through that 123.6. It had a really, really, really down day. If we would have done this webinar yesterday, you guys could be in some really nice profits if you trade oil and checked this out on a 4-hour. How can I switch this over to... 1 second, guys. Okay, cool. So you should be able to see my oil chart now, just to kind of see what I was saying. It did continue lower, went right through the 123.6, now heading towards the 161.8. At this point, you'd want to probably be out of a good amount of your positions. I would even book all profits here. There's no reason to wait for the 161.8 on a beautiful 4-hour move like this. especially because you're probably going to expect to retrace back up to this 100% level where this support, which is now probably going to be resistance level, is. So on this, you'd probably want to book profits now. But let's check out something that I don't trade. That's like NZD USD. Okay, I never trade this. What's the ideal leverage for an account of $250? So listen, with leverage, guys, it's not really gonna matter the leverage you use, right? It's more about how experienced you are. If you're new, I wouldn't recommend more than like 1 to 100, maybe 50 to 1 if you're with like Oanda. But if you're experienced, you can use whatever you want because you understand risk management, you understand all of that. I'm sorry that's all like that. And you won't really need to worry about over leveraging the account. If you're new, trust me, stick to a 1 to 100 at most. 1 to 200 if you really don't like the 1 to 100 and you're not opening up lot sizes that you think are appropriate, or your margin's not good. But still, you shouldn't be having any issues on any sort of leveraged account because you really shouldn't be risking that much to begin with. So settings for the Bollinger Bands are standard. If you want to see that, that's just right here. Standard inputs. So yeah, length 20, source close, standard deviation of 2, offset 0. That's on TradingView. I don't think MT4 gives you any other options for that. I'm pretty sure they don't. Cool. So let's come back into this real quick. There's no real good examples here. All right, we're going to use this because this is actually a smaller retest, so I might as well just show this to you guys. So you have this range here, right? So little range, you got your 1, your kind of a second push, and then a third push out. So this is probably going to be really ugly, but I'm going to show you guys this anyway. So with this, technically, right, this would be your retest. It's the only thing that actually, you know what? Hold on. It's not going to make a difference anyway. Okay. So this is pretty much your retest. It's pretty small. It's pretty weak. And the reason I'm going to show you guys this is because this actually greatly affects your risk to reward, which we actually didn't talk about. So I'm going to jump into that in a second. But highest point of the range to this really, really weak breakout. And then back to here. I mean, it's not too bad, I guess. You have your 100 level, which was hit. You actually have all levels hit, which is beautiful. But when you usually have something like this, like a weak breakout, usually you're not gaining all that much in pips. Now, this is a 4-hour chart, so this is actually pretty nice. I mean, if you got in, well, I don't know, let's say like here, because nothing's perfect. I mean, you're talking about 100 pip profit there, 130 pip profit there, and 200 max to a 100 pip risk. So yeah, this is really not that nice because again, you don't have a nice breakout. Like if your breakout was to down here, then yeah, because now you have whatever it is, it's the same risk, same 100 pip risk for a much greater reward. Now you're targeting 300 pips. That's better. But this is kind of weak. The risk to reward on these small breakouts they're just not optimal. Unless you get like a really deep retrace, which then affects obviously your profits again, it's not worth it. But let me actually return. I'm not going to go to the PowerPoint. I'm just going to come in here real quick. I want to show you guys how to do the not the risk management, the risk to reward. So let's turn all this off. Get that out of here. Get that out of here. Yeah, it's this out of here. And keep the range. Okay. So obviously you're looking for entries around here. And you're probably going to get an entry with inside here. So 2 things you can do. You can, and this is going to depend heavy on market structure. So you can put your stop loss either, what do I want to use? I want to use the hell do I want to use? Let's use a trend line. So you can either put your stop up here, right, above the total high, or if you wanted to reduce the risk and get an even nicer risk to reward, but a higher chance of it stopping out, you can put your stop above this market structure high. Right? So using these two as your gauge for getting stopped, and your entry, not perfect down here somewhere, you can have a, if you're targeting the 123 primarily, you could have a 1 to a 2.45. It's not bad. It's pretty much what I said, a 1 to 2.5. Or you can come down to here where you can get a nice 1 to about 3.25, we'll say. But if you put it up at the top here, less chance of being stopped out on the trade, but more than likely going to hurt the risk to reward ratio. So you're running a 1 to 2 at the 61.8, and even worse, a 1 to 1.5, which I would not take on a wider stop like that. Now, if we go back to the other side, right, where we're over here, you don't have much of an option because the lowest point here is the last point. Right? Like, you're not going to put it under here. It doesn't make any sense. This is the recent low. I mean, you could put it here in hopes that that holds, and that's not really all that much of a pip difference, to be quite honest with you. But this is your low point. This is your recent low. So if it's going to come down and test a low, it's going to come down and test this one. It's not going to. It may stop and slow here, but it's not necessarily going to really care. I mean, you have nice support there, no lie, but if anything, it's going to come for this low. We'll do one more example just for risk to reward. Actually, I'm going to show you guys oil real quick and give away my entire chart here. Actually, no, I'm not. Use this oil chart. So with this oil trade, is actually really, I can already tell it's a really nice risk to reward. So you have a short here, right? So let's say you get in there. Again, we're not perfect. You're not perfect. You're not going to get the perfect entry. If you do, hey, I'll clap it up for you, but like, don't expect that every time. So 161.8. Again, if you put it against the recent high here, you're running a 1 to a 3.28 risk to reward. Very nice on this. I mean, I'm running, because my entry is like up here, I was running a 3.6. Actually, my stops were above that high. So I'm actually running a 4.12. So this is a 1 to 4.12 risk to reward ratio that I'm currently in on oil. So that's cool. You can do it that way. Again, you can reduce this risk and put that higher and still run a 1.285, which again is a great risk to reward ratio. There's nothing wrong with taking a trade that's a 1.25 or higher. I wouldn't take anything below a 1.2 in my personal trading plan, but if that's in yours or you're okay with that, you're more than welcome to do that as well. Any questions from you guys? Settings for Bollinger Bands, no, I already went over that. Yeah, so any additional questions? I can do one more markup if you guys want. If not, I am going to cut the webinar because I do have some stuff to take care of today. There will be a recording for you guys to rewatch on this YouTube channel that it's being hosted on right after YouTube gets to processing the video. So I'll give it about 2 minutes for that to come in. While I wait for that, I'm just going to do a quick markup on UJ and see if we see anything here. I apologize. My UJ chart's like a giant mess right now. But let's see what we see here. See if I can't get you guys maybe a future trade or something while I wait for questions. See, again, guys, this is your... I'm actually going to delete that real quick and show this to you guys. So this is like your range, right? Your Monday, Tuesday ugliness. You have that. Now, price is looking to come down and retest this, guys. I mean, it's testing the backside of this trend line right now, which might actually stop it from coming down here. You could enter off that technical if you wanted to, but you wouldn't be using the strategy we talked about today. because you want an entry down here, somewhere in this range, if you're using the strategy we talked about today. But if you got, let's say you got a retracement, let's say it was a nice one to here, you'd be looking at pushes up towards 116. So with possible March rate hikes, guys, and NFP, this could be potential take profits. I mean, if it holds these lows, which I'm not saying it will, I'm not saying it'll even go anywhere up here right now, because this is just basic analysis and it's not giving us what we want yet. You would expect 116s. You could maybe, I mean, this is like, this risk to reward is probably gonna be pretty ugly. 1 to 2.3 roughly. So that's not too bad. I mean, you could probably even put your stops. I mean, you could probably make it a 1.3 if you wanted to. So simple breakout strategy, guys. Simple way to manage it. Simple way to not freak out. I mean, right now you guys can see this is coming up to the middle Bollinger Band here. So this is just more confirmation that maybe it's not going to test any lower. But hey, we'll see. AUD USD. I could do AUD USD. This is a, let me move down. Hold on. And again, guys, any time frame here. So I mean, you can come down to a 1 minute if you wanted to. Oh, my Mac's about to turn off because of no battery. All right. Let me see. I mean, guys, this like really, it's like not really a range. It's so ugly, but yeah, I mean, I really don't like this. I'm sorry. Like, this is like, again, like, you got to be picky. Like, this does not follow what we're looking for. This is just not the kind of range I'd want to be entering. So I'm sorry, but I can't do AUD USD, not based off this price action. I mean, I could probably find something in here on a smaller time frame for you, maybe. Like I said, yeah, this is not some magical thing you're gonna find every day. You'll probably mostly find it after Asian sessions, low volume days. Yeah, so we got something right here. So we have this. I mean, you can even include maybe you can include that in the range. I would. And yeah, so what we have here, guys, we have a range. Again, I mean, this is all back testing, so it's kind of hard for me to give you guys a real life example of where we'd be getting in and out exactly, because we're not on the charts at that time. But you could take the bottom of the range to the breakout point here. You come down to here. This might have not even, I don't even know if this played out. Yeah, so look, another example, guys, of one that didn't play out fully. So you have this, right? So you got everything you need. You got the range, you got the breakout, you got the retest level, you got the confirmation that it's going to keep going up. I mean, this was like another retest to the range, which, you know, you got to expect. You're not, stops aren't at break even yet, so it's not like you're going to get knocked out, but you may be worried. Comes up to the 100 level, misses the 123.6, so you're really not booking too many profits, and it's going to come down and eventually stop you at a break even. So this is actually just a range sitting on top of another range. This is the same thing that UJ has. Okay, so you have where is it? No, not that. I don't even know where I am on this right now. Yeah, so you have like this bottom range and this a range on top of it back down in the bottom. It's just a mess. Like, this isn't the kind of thing you'd want to be trading. But when it breaks out like this, then you can find your entries, guys. So with no more questions and my laptop at about 5%, I am going to shut this down. Thank you guys for tuning in. Like I said, there will be a recording on this channel. If you want the slides, make sure you guys have me on Facebook, facebook.com/ScagFX. I can send that to you guys. I can even drop it in the Phoenix FXC Telegram. If anybody needs help, needs more information, wants to learn more, feel free to DM me, guys. I'm always willing to help you guys out. Thanks for tuning in, guys.